everyone. I'm Lori Bloom, co-founder of Gracefully Graying. Welcome to Gracefully Graying Live. We are connecting you to information and resources in Michigan and beyond to help you create and maintain a productive and vibrant life as we are all gracefully graying. And as always, a thanks to our sponsors. Enjoy the live stream.
Welcome to Gracefully Graying. I'm your host, Attorney Henry Gornbein. Today on Gracefully Graying, we will be discussing the important topic of long-term care insurance with my guest, Certified Life Underwriter, Dan Tripp. Dan, welcome to Gracefully Graying.
Thanks, Henry. Good to be here.
First of all, Dan, why don't you tell our viewers a little bit about who you are and your background?
Okay. Basically, I started in the insurance business in 1990. So I'm coming up on 33 years of being in the business. Started out with Northwestern Mutual Life, doing life insurance and disability insurance. And over the years, I started to become more of a specialist in the long-term care space. I started working with seniors and their families to just work in that arena. And I've been really specialized in long-term care now for the last 10 years.
Dan, tell us exactly what is long-term care insurance?
Well, Henry, simply, I think it's insurance that's designed to take care of extended care costs that aren't covered by traditional health insurance or Medicare, for that matter.
So when we're talking about this, are we talking about situations like if you're in a senior residence, long-term care, nursing care, if you're in memory care, if you have medical expenses, these would be covered by long-term care insurance? Would that be correct, or at least
Correct.
Parts of it?
Yes. Especially for the assisted living communities where Medicaid doesn't pay anything, it's really important that long-term care insurance actually can pay for the bulk of those expenses.
Why is it important to have long-term care insurance?
Well, most people think of it as insurance as being for themselves. And when it comes to life insurance, maybe, when it comes to disability insurance, maybe, but when we talk about long-term care insurance, it's really more important for the family, because it really becomes the difference between having family caregivers or family care managers. And it helps eliminate stress, both physical and mental, as well as anxiety around how is mom or dad going to get the care they need.
Well, how does it work? I mean, it's like the insurance company, a claim is made, for example, and first of all, what are the waiting periods? Why don't you tell us about that?
You can have as little as a 30-day beginning date up to typically 365 days. Some policies will let you actually have a 2-year wait, but the smaller the waiting period, the more the premium on the case. So typically we look at a 90-day beginning date for assisted living, for nursing home care, and for some adult daycare services. The good policies, however, will waive that beginning date if care can be received at home. You can typically start day one.
And isn't there some type of tie-in with regard to Social Security or Medicare payments as well, or not? Does that have any bearing on it?
No. Social Security is a separate animal. You don't necessarily have to be taking Social Security in order to qualify for a claim under a long-term care policy. I think where the Social Security comes in at is if you have Medicare Part B, your Social Security payments will pay that monthly premium for Part B. But that has nothing to do with long-term care insurance.
Dan, how difficult is it to purchase? And the reason I'm asking this question is before you and I had talked, I had been led to believe that it's very, very difficult to obtain it, and then many carriers no longer sell it. So tell us about that.
Well, take your second point first. There are only 12 companies that sell any form of long-term, traditional style long-term care insurance. There are several others that do what we call a hybrid, which is a life insurance based policy that allows for the acceleration of the death benefit to be used for coverage. As far as eligibility goes, you're right. There are approximately 160 different health issues that are automatic declines with most companies, and 360 prescriptions that could be problematic as well. Not all of those, because sometimes drugs are used for other things, but the underwriter looks at 360 different prescriptions as part of the underwriting process. So if you as a insured are trying to get this policy and you're on maybe a Abilify or something along those lines, you're going to get a decline. It's very difficult from an underwriting perspective. The younger you are, the better health you're in, and the lower the premiums. So that's why we always try to suggest to people to start looking at this while you're still healthy.
Raise an interesting point, Dan. What if you have pre-existing conditions? Are you out?
Yes, say that again, please, Henry.
I'm sorry. Let's say someone has pre-existing conditions. Is that going to eliminate you from the possibility?
It depends on what it is and how long, is treatment current. For instance, did you have a heart attack 10 years ago, or did you have cancer 5 or 10 years ago? Those are typically not going to preclude you from being excluded. But if you're currently undergoing treatment for things, yeah, that's more of an issue with the underwriters. So pre-existing can be just that. It's just something that happened to you previously.
Yeah, and I have another question for you, and that is, I have long-term care insurance. And when I got it, I think I was on something for bone density. I forgot what the prescription was, but I know because of it, it was a little more difficult to obtain it. And I have not been on any meds for bone density for many, many years. So I guess what you're saying is you look at prescriptions, and depending on what someone's prescriptions are, that can eliminate them or make it put them into a different category.
Not if the policy is issued, Henry. In your situation, a claim would be a claim could be for anything. You could fall and break your hip and have to have some help at home. That would be a legitimate claim. They can't re-underwrite you once you have the policy. They have to pay for it.
Now, you mentioned the younger someone is, the easier it is to get it. What are the typical ages of the people that you have as your clients in this area?
I believe I like to look at people from like age 40 or 45, still working, still healthy, still vibrant. Of course, most policies will go as high as age 79 if you think you can get it. But again, the younger you are, the less problems you're going to have from a health perspective.
Sure. So basically, your target audience are people in their 40s and 50s, typically, I would imagine.
Correct. Those who have experience with caregiving. Maybe mom or dad has had some issues. They've seen what it's like to have to be a caregiver, or what it's like for mom to have to move out of her house. And these people are typically family members too. They've got children, and they don't want their children to have to go through what they've gone through. So you're right. The 45 to 60 age group is premier for getting the coverage in place.
Dan, what about the costs? What are typical costs? And I know premiums are usually paid. I know mine are paid, I think, semi-annually. Is that typical?
Most people pay monthly, but
okay.
Some people pay annually. The cost is going to be based on a whole litany of different things: age, sex, Ladies are more expensive than men, just like life insurance. What riders you might put on the policy. Do you have an inflation fighter on there? Because each inflation percentage drives the price up. So on a typical, to give you an example, a typical 60-year-old male can get a $4,000 a month benefit for about $225 a month.
Okay. And what is the typical benefit that you sell? Because I know nursing care costs, I mean, easily can run anywhere from $5,000 to $10,000 a month, easily.
I'm not a firm believer in overinsurance.
Okay.
So depending on age, if you're 55 and you're probably not looking at using your policy for quite some time, I want to put an aggressive inflation built into that. So it grows every year. So if 4,000 today might cover 80% of your assisted living costs. If we can keep that paced with the increases in that over the time frame, I don't have to look at telling somebody, well, yeah, you're going to need a $10,000 a month policy, but not for 20 years, but it's going to cost you $900 a month today. I'm not going to get much business if I'm doing it that way. I would prefer to incorporate the insurance into an overall plan of payment, not be the sole answer.
So what you're saying, I guess, for our viewers is preferably you want a hybrid where there's a combination of life insurance, which has a cash surrender value, obviously, so that you can tap into that along with the long-term care insurance. Would that be a correct statement?
It would be a partially correct statement, Henry. I don't
fill in the blanks for us.
Well, first and foremost, I'm a traditional long-term care guy where the policy is strictly intended to pay for long-term care expenses. For the person who says, well, what if I don't need it? Then we have that discussion about the hybrid type of policy where the death benefit of a life policy can be accelerated during life to pay those needs. The downside to that is typically there's no inflation that is in place. So if you're 60 years old and you buy a $200,000 policy, that $200,000 is still going to be $200,000 25 years from now, but it's only going to pay half of what it would have paid if you needed it the day you bought it. There's a third option called asset-based, where it's a life insurance base with a separate component for long-term care. If you go on claim, the life insurance benefit is used first, and then the other policy is tapped into. So you actually can double your money for the price of one policy, but it's not inexpensive in those cases because you're actually buying two different products.
I think, Dan, the important point for our viewers is the fact that long-term care insurance is important because I've seen over the years in my career as a lawyer where someone ends up in an assisted living facility or in a memory care unit, and you can go through literally hundreds of thousands of dollars, if not millions of dollars, in a very short time. So having long-term care insurance is a way to make sure that you're taking care of loved ones as well as yourselves, and to make sure that there's something left behind in the event of your death. So I think that's an important point. Dan, before we sign off, are there some other thoughts that you would like to share with our viewers?
Yes. The first and foremost thought that I have is don't wait. You could be one doctor's appointment away from ineligibility. Get with somebody who knows what they're doing and have a discussion and involve your family in that discussion. This can't be a unilateral thing. I mean, you're protecting your family from, like you just mentioned, an unwieldy amount of dollars going out for care. This is a great way at pennies on the dollar to offset most, if not all, of your long-term care costs in the future. Also, just there's different other things that I would like to leave viewers with is ways to pay for it. I know we always have the discussion about where's the money coming from. The new Secure 2.0 Act was just passed by Congress, allows someone to take out up to $2,500 from their retirement plan, and they have to pay tax on it, but they wouldn't be subjected to the early withdrawal penalties if they're under 59 and a half. Another part of the ACA or Obamacare allows for a 1035 exchange, which is a IRS code that allows the transference of cash value from a life insurance policy into the payment plan of a long-term care policy and avoid taxation. So there are methods out there to tap into if that need arises. So don't discount the fact that you maybe $225 a month is more than you wish to spend. There are ways to do it. But the bottom line comes down to, if that's an issue, start smaller and work your way up. Ladder some policies over time if you have to. But protect your family from the physical and mental stress that is going to come with caregiving.
Important points. Dan, we're out of time now. I would like to thank you for being our guest on Gracefully Graying. I also want to have you back because you are the president of an organization called Point Professionals, and we would like to explore that with you on another date. So I want to thank you for being our guest on Gracefully Graying, Dan Tripp. I want to thank our viewers for watching Gracefully Graying, and of course, I want to thank our sponsors. Thank you.
Thank you, Henry.